This is The Bottom Line. The Bottom Line on 938 Live.
Now, June's new home sales for the private residential market in June came in 68% lower than in May. And what will be the impact on the second quarter home sales figures? And should investors even think about buying a property now or wait until the market picks up? For a health check on the private residential market, we have with us Nicholas Mak. He is Executive Director at SLP International Consultants. Nick, how will the latest June data factor into the total second quarter private home sales?
We must view the June sales figures in this context. The June figures are very low. Two particular reasons. One is that June school vacations are taking some parents out of the market. Another reason is the World Cup season is actually keeping some market participants away from the market as well. And as a result, developers are not releasing as many units. And with less supply, there's also less transactions.
I see. Now, going forward, is the suburban area still considered hot property?
Yes and no. In the primary sales market, that's where developers are selling the units. It is still very active because that is where a lot of the new launches are located. They are all in the suburban areas, most of them, and that is where many buyers can find a lot of choices. But there is also a growing concern that because there's a lot of supply in the suburban areas for the last 3 years, and some of them were bought for investments, some of these investors are hoping to either sell them or lease them out. And preliminary figures have actually shown that actually rentals in the suburban areas are facing the greatest downwards pressure. So we may see that some of these investors may get a bit disappointed in the next few years that they either have difficulty renting out their investment units or may even have to may not see the kind of capital gains they are hoping for.
Some analysts say based on the URA caveats data, the per square foot or PSF price for new home sales in the second quarter actually edged up. What does this say about the market?
It's a bit interesting because what it actually shows is that in the residential market, there's actually a two-tier market. So the prices on the per square foot basis of new homes are actually creeping up. And one of the reasons is because some Singaporeans like to buy new homes. Another reason is that some of these new homes are actually getting smaller and smaller. But in the resale market, the secondary market, especially in some areas that are not very accessible, some of the owners are finding it tough to try to sell their units, and hence they may have to be much more flexible in their asking prices.
With more properties being completed and a slowdown in population growth, how viable is buying a property for investment now?
The demand for real estate will go through cycles, just like any business cycles. Real estate can still be a viable investment, but there are several factors to consider. One of these factors is the investor's financial health. The concern is that it is becoming the dream of a growing number of Singaporeans, not just to own the home of their own, but also to own at least another property for investment. And some of these people are stretching themselves financially just to do this. Others invest in shoebox apartments or real estate in untested or risky markets. The investors can probably do with such investments in the low interest rate environment, such as what we have today. But such investment can turn out to be problematic when the financing environment changes. Well, slow population growth is a concern, and it will eventually lead to lower demand for real estate. But in the near term, the slow growth in the expatriate population due to the government policies will have an even more immediate negative impact on the leasing market, which in turn is already affecting many property investors.